Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
Hi, it's Kerry Lutz. We're live on the Financial Survival Network. I am just dialing up David Morgan right now for a special show on the latest silver raid. If you've been watching silver for the past couple of months, like I have, then you know something's up, something's happening. We need to know exactly why they're trying to manipulate. We're calling up David Morgan right now of silverinvestor.com.
Hello.
Hey, David.
Hi, Kerry.
How you doing, man?
I'm doing good. I'm doing better than I've been doing in a while. Not that I'm ever bad, but no.
Okay.
Trying to nice to get away from the Spokane area for a while.
From the noise. And I've got you kind of live right now, not to play ambush radio, but I'm trying a new experiment on a live broadcast. David Morgan called me early this morning, woke me out of bed. I was dreaming of literally gold coins falling from heaven, and I was lying on a bed of silver bars, and sure enough, David calls me. And that's appropriate because he is Mr. Silver, silver-investor.com, and themorganreport.com, and he had some important info on what's taking place with silver right now. David, always great to have you on the show.
Okay, great to be with you. Really what's got my attention was so many of our members have asked me time and time again in the recent days whether silver would, get under 31 or 30, and I said 31 is recently almost a certainty, and I'm pretty sure as well that we'll see under 30. I personally had a pretty good order under 30, and when I got up and saw the market there, I called one of my brokers to see if I got filled or not, because sometimes on these very brief moves at certain levels, the market will actually get there, and there's so much buying power that your order doesn't get filled, the market comes back up. I was filled under the 30 level, and now we're already up about 27 cents from that area, so on a day trade, not that I day trade because I don't, but anyway, the market's already found a bottom, at least today, in gold and silver. But I just want to state for all of your listeners, Kerry, that I want to stay consistent. For the last several months, I've said to buy physical silver under the $30 level, you are going to be very happy a year or two out. And I really believe that, so that's why I got you out of bed and said, hey, can we do a radio show?
Hey, and I believe it too, because these markets, they're rigged. I mean, I've become the biggest market cynic you can believe, David. I just watch the action, and nobody who's putting in these huge sell orders is what I would call a rational market participant. They're not looking for profit. They're looking to drive the price lower, and it's financial repression. It's just an act of financial repression. And that's why when it goes below 30, man, it's just screaming by in bright neon lights,
Well, that's how I think. I also wanted to reiterate what you said. There's some resistance about market rigging, although these days I think almost everyone is aware of it. But if you just go back and check the facts, the Working Group on Financial Markets is the exact name. Google that, Working Group on Financial Markets, and read the facts. There is the SEC, the Secretary of the Treasury, anybody you want to name in the mainstream or the establishment that has direct power to intervene in the markets. So to say that they're not there is someone that absolutely is blind. So that's part of the equation. The other thing is, well, why gold and silver? They're such small markets. They're a rounding error compared to the amount of money in the credit markets, and that's true. The problem is for people in the know that most people instinctively understand if gold is going sky high and silver doing the same, or one or the other, that something is wrong. They might not know why, they might not understand inflation, they might not understand how markets work, they might not understand any of that, but they intuitively understand that with the metals going very, very high rapidly, that is we're attending an event or events taking place that means something is wrong. And that's why these people are in there keeping these markets suppressed. They cannot control them, I think, to the level that many on the manipulation camp think. The markets are manipulated, but they're not manipulated probably to the level that some people think they can be. All the time, the second biggest question I get is, well, they're in there moving these markets around, therefore I'm not going to participate because they have all the control. And the answer to that is they have control, but not ultimate control. Free markets always win in the end. And if they had ultimate control, silver would still be at $5, and it's not. It's been as high as 48. In fact, it almost got away from them when silver got above 35 last time. They had to do a lot of precision maneuvering, and they were losing money. For the first time that I've been looking at these markets over the last several decades, particularly the last 20 years, I noticed short covering at high prices. Normally, they only cover the shorts after they've beaten the market down and they're in a win position. But they were starting to lose control, and they were getting scared, and they're actually recovering some of their shorts at high prices, which means they were losing money on some of those trades.
Yeah, no question about it. And that is a rarity because aside from everything else, this manipulation has been guaranteed profits for Du Bois, as they're referred to in some circles, because when you know the hit on silver is going to take place and you're selling it short into the decline, and then you know it's over and you buy it back, guaranteed profit. You can't lose money doing that, can you?
No, not in a rigged casino. I mean, it's, it is what it is. But again, I just want to state as emphatically as possible that, physical silver does not equal paper silver. All these games are played in the paper markets. And every time someone goes out and buys even 1 ounce of silver, you have deleveraged the system. In other words, you've given them less and less power because at some point they're going to lose control because there's not going to be enough physical for them to really play these games. Most of this stuff really doesn't matter for the aspect of physical silver moving around because it doesn't. It's just an electronic trade that takes place that moves the market's price, but it doesn't change the location of the physical silver in the market. People that are savvy and understand how markets work, they see the opportunity under 30 to buy, and they buy the physical, and if there's a lot of large orders under that at different levels, like 30, 29, 28, 27, for an example, and these are big-pocketed people, then, this could be the final low in this series before we start up again. In fact, that's what I really think will take place.
Hey, and if you remember, the day that Bear Stearns collapsed, and they were the ones that held the huge short position, which then, after their collapse, devolved to J.P. Morgan. The day they collapsed, silver hit a new high of $21 an ounce, and many people speculated that was part of the reason for their collapse. It's speculation. However, when you see it in the context of what's happened since and what we've been going through with these markets, it's not too big a reach, is it?
No, it's not. I mean, there was, I forget the exact people's names. I even forget the entity, but the big copper trade in Japan that almost... and there was Nick Leeson, and there was a whole book written about him. So these guys get so much leverage, and then when they get a bad trade, they add to it. Certainly. I mean, it took out Barings Bank. I remember when Barings Bank went down.
Oh, yeah.
And, of course, I've been in this camp. I guess, go ahead, call me a doomer or whatever. I don't care what label you put on me. The facts are that these unstable financial systems always have their comeuppance. So when Barings Bank went down, I remember thinking to myself, oh, my goodness, that is one of the oldest, most established banks in London, and that thing's going down. Maybe that's the trigger point. Well, bit naive, I guess, Kerry, looking back at it, but nonetheless, it did go down, and it did have some effect. But I think we're at a point now where there's so much interconnectivity between all the banking institutions and brokers, and there's so much stuff being pushed under the carpet that it's such a pile of crap that everyone's recognizing there's some big pile under this carpet, that we're at a place now where another Barings might, be that tipping point.
Yeah, the black swans are circling around, waiting for the exact opportune moment to descend, and that moment always occurs when they can inflict the most possible damage. And like you say, if you can buy silver at $30, now yes, you would have been better off buying it at $9 or $10 or even at $4 or $5 like I knew you bought it at. But $30 compared to where it can go, and as an insurance policy, you can buy whole life or you can buy term life. So if we look at gold as whole life and we look at silver as term life, buying a few hundred ounces of silver or whatever is in your budget, it's making more and more sense. The logic of it is becoming more and more appealing and attractive. And I don't know how you turn it down when you see the turmoil and the devastation that's taking place in Europe. I mean, Spain, we're not even getting the news reports, the riots, burning out the banks, the bank runs in Spain, the fact that all of Spain's banks are insolvent. It's all just converging on this perfect storm, and that's what we're looking at now, and that's why silver inevitably is going to go higher, aside from all the other reasons that we've talked about.
Exactly.
Yeah. So what's next on this thing? You think it'll hang around this $30 level for a while and then spike, or does it take a cataclysmic or a catalyzing event like a bearings going down the tubes or a collapse on Wall Street? These too big to fails, they're really on knife's edge.
Right. Well, for the record, no one knows, but as far as my thinking, having been in this market for so long, usually you see a spike low. We're going to see a spike low, and once that's established, I think that'll be the bottom. We'll start back up, and I think we're still months away before we get confidence back in the market. But I wouldn't be surprised to see silver, in the $31, $32 range within a couple of weeks, and then build a base from there.
Yeah, absolutely. It's been basing, it's pretty much, I guess, been close to a year. Silver finished out last year down a little bit, the second time in 11 years, and now, it's been at that level. Attacks have brought it below 30, but it hasn't stayed below 30, which is showing some real strength there.
Yeah, it's too early to say one day doesn't make a market. I'm fond of that phrase. So we'll have to wait and see what happens next week. I'm very anxious to see what kind of trading we get next week. And then once I get about 3 more days worth of trading and see what the volumes are, I'll be able to do a better forecast.
Yeah, we are living in interesting times, aren't we?
Indeed we are. And Kerry, I want to thank you for taking my impromptu call and getting this message out to your listeners.
All right. Hey, and thank you, David. You're always welcome on the Financial Survival Network. If you want to find out more about David and his work, silver-investor.com and the Morgan Report, right?
That's correct.
All right. You be well.
Thank you.
Take care. Bye.